Good evening. It's September 17, Friday, 6:07 p.m. Welcome to episode 18. Good evening to you, Wowie, and to our listeners. I hope everyone had a great week so far. This is your host, Mark Yu.
And Wawi Santos.
Welcome to the Mark Yu and Wowie show. A disclosure, this show is made for sharing information purposes only and not to be considered investment advice. We record once a week. I and Wawi are both physical therapists here in the USA with the same passion and interest in researching and investing our hard-earned money in the stock market. The show's goal is to share and learn from each other, answer questions, and to our coworkers in the medical field, thank you all for your hard work. We are available on YouTube, Spotify, and Google Podcasts. On our previous episode, we discussed the recent downdraft that the US stock markets have experienced and also the different or contrasting views between the up and coming hedge fund, or not hedge fund, but fund manager, Kathy Wood, and also in comparison to Leon Cooperman of Omega Advisors. For those who missed it, please feel free and go back and, you know, take a closer look at what we have discussed. Uh, for today's episode, listeners, you guys are in a treat as we have our third ever special guest joining us this evening. He has been a well rounded person with lots of experience, not just in the medical field, but also in investing in his hard earned money in the stock market, but also in the complexities of the options market. This person, like Wawi and I, also practices in the physical therapist field or rehabilitation medicine. He has held different roles from clinician to the director of rehabilitation. In terms of investment experience, he has been a stock investor since 2012. And also, he has been dealing with trading options since 2017. So we are in for a treat. This person is none other than Mr. Pradeep Rapalli. Welcome to our show, Mr. Pradeep.
Thank you.
Hello,
Thank you very
Pradeep.
much, Mark. Thank you.
How's it
It's a
going,
pleasure to
Pradeep?
be here. Hi, Bobby.
Good, good. So, like Pradeep, like us, we also practice in the physical therapy field. So, maybe you can introduce yourself, Pradeep, to our listeners.
Yeah, my name is Pradeep Rapalli, and basically I'm from India, and I have been a physical therapist for more than 15 years now,
Mm-hmm.
and I like what I do, and basically I have been in geriatrics because that's my passion. That's one of my passion to work with older adults.
Right.
Um, so looking forward to getting a PhD in physical therapy as well. I'm working towards
Wow.
that too.
Right. For our listeners and to you, Wawi, just a brief background. I've worked with Pradeep. He's my director of rehabilitation manager or boss when I first came here in the US in 2014. So I owe a lot from Pradeep for sure because he's the one who introduced to me to those stock options and also to pursue
Oh,
to pursue the doctorate of physical therapy degree. If not for him, I may not have even, qualified or applied for the doctorate program. I've gathered my reference letters from this guy, so I owe this guy a lot.
Thank you very much. It's a privilege to be here.
And he's been really nice as a manager too. Um,
Thank you.
so yeah, let's go ahead with our question. So, if you don't mind, Pradeep, what made you want to pursue PT? If you want to
When I was
discuss it. Mhm.
saying that in my, when I was introducing myself, geriatrics. Geriatrics is a base of my career.
Mhm.
So even when I was in India, like, my family background, my almost everybody in my family is from medical background. My mother actually is a retired principal of a nursing college.
Oh wow. Mhm.
So, and passion towards, you know, serving the older adults actually brought me to physical therapy.
Oh wow. And so what made you pursue like started investing at least here in the US? So since you started in 2012, right?
Yeah, I mean, officially started in 2012, like, having an account and doing that and this and all. But I used to track the stock market even back in India, even like,
Oh.
when I was kid and all that. I used to just track it. I mean, I never was active because, I never felt like an adult, making the decisions.
Right.
But I was tracking it, and the national stock exchange in India was around like 5,000 when I started
Was it
looking at it. And
Sensei or what's the Sensex? No. What's the stock exchange?
BSC as well as NSC.
BSC. So
BSC, yeah,
so back then you said it was just 5,000. The index was 5,000. How is it now?
5,000 ish, close to 5,000. It was going up and down.
Uh-huh.
I think now it's way too much ahead of, I mean, way too much more than that.
It
Um,
multiplied.
yeah. So I was just tracking it. I never actually invested.
Mm-hmm.
But I when I came here
Mm-hmm.
in 2008,
Mm-hmm.
I started learning the business side of it when I was pursuing my MBA. So
Oh
I learned
yeah.
the time value of money. That's very important,
Right.
and that actually made me like, this is the time actually to invest.
Mm-hmm.
Time is now, and there is no waiting that need to be done for investing for any person. Market, cool market, hot market, doesn't matter. You can invest anytime.
Right.
So you were an MBA before you became a therapist, Pradeep?
No, I was a therapist. I came to pursue the MBA,
Mm-hmm.
and
Mm-hmm.
while I was pursuing the MBA, I cleared my license exam, and I started working as a therapist. Then finished my MBA. After like few years of experience, then I got into the director position. So I was in the managerial as well.
Do you find having an MBA an advantage as far as investing?
Not directly, but it does. I mean, it clears off a lot of your questions. I mean, investing doesn't have to have any qualification period, but it opens up your mind a lot. Like, what value actually brings. How to, the accounting principles. For example, gap. Generally accepted.
Right.
You will get exposed
Mhm.
to a lot of stuff when you are actually pursuing a degree such as MBA. You
Right.
know what lingo these people are talking about. Whenever there is for example, there is a earnings call for particular
Right.
XYZ stock,
Right.
and
Mhm.
you actually know, like, what exactly they are talking about when you have some background. Otherwise, there will be like, it's Greek and Latin, like, what is it? What is that?
Mm-hmm.
So we can assess the company a little bit more accurately if you have
Mhm.
such background.
Right. As like what Robert Kiyosaki once said, rich dad poor dad legend. He said, like, if you want to be rich or get rich, at least learn the language of the rich. And what they're using most of the time are accounting numbers. Like for our listeners who don't know, GAP, the one that Pradeep just mentioned, it stands for General Accounting Accepted Principles. So these are usually the terms that are side by numbers. When you see a earnings investor relations report or quarterly report. It's just basically looking at jargons if you're not aware of it, and you have to uh, take a closer look at the meaning. So I guess it's an advantage definitely if you've undergone MBA or taking MBA as a to pursue further knowledge in the field. So next question, Pradeep. What would you tell your younger self who is still in his early 20s, knowing that you know now, like any specific or even broad, like tips
Uh,
that would, knowing what you know now that you would not have, access to before, like the information or experience?
okay. The short answer for it is I just recently came across this, and that fascinated me a lot.
Mm-hmm.
And that was in our group, in our investment group.
Uh-huh.
um, Timing the market,
Mm-hmm.
versus time in the market. Time in the
Right.
market will definitely win versus timing the
Mhm.
market. I mean, if you are speculative, I mean,
Mm.
yeah, options are mostly speculative, but you have to be, if you are thinking long term, you have to be a long term investor as well. So that's what definitely I would, if I was, if I were to do it all over again in
Mm.
20s, I would have just, whatever I can, whatever the minimal I can, I would have invested in the stock market, and just,
Mm.
let it grow.
Right. I totally agree with you, Pradeep. Totally agree. 100%. What do you think, Wawi? Time,
Yeah,
time
I
minimal.
agree too. Yeah, because of compounding, the
Mm.
longer you stay in the market and hold your investments, it will compound over time.
Yeah, one of my friends was actually giving me a simulation, like, when a child is born. I mean, this is just an arbitrary simulation.
Sure.
When a child is born, if you actually deposit, somewhere around $8,000 to $9,000
Mm-hmm.
in their name, by the retirement, can you guess how much it becomes? Almost $1 million.
By retirement. Oh wow. So it kind of like multiplies. You don't even think about it. I mean, to start with, it's a huge capital. Not everyone has that amount of money to set aside. But if you really are determined, you can make plans for it, how you can afford that type of arrangement. But yeah, definitely. Because money compounds over time as long as you stay invested. Like I was looking at this chart, as you've said, Pradeep. So you started at 2012, the S&P 500. For our listeners, S&P 500, it has the 500 largest US companies. So if anything, it doesn't guarantee that none of these 500 companies will go bankrupt, but most of the time these are like the legit, like, biggest companies. So if you stick with it since 2012, let's say, it was somewhere around 1300 or 1300 points. It's not by dollars. So 1300 points, it all throughout this time, it more than doubled, 209% as of today. So regardless of the COVID pandemic, which was, it's an eventful fact. Many people died. The dip, the result, the panic and all that, the market recovered, like even doubled from there. And then, going throughout the years, I bet there was even more panic in 2011. I think, Pradeep, if correct me if I'm wrong, I think 2011 was like some sort of issue with the banks again, with the euro issue that they had to. Before then, they were really aggressive in tightening the policy,
Right.
but they kind of underwent through the taper tantrum, which kind of sank the markets back then.
Yeah,
Yeah,
like a knee-jerk reaction again.
yeah, and taper tantrum of 2013, when everybody was thinking of um, the Fed increasing the interest rates too early that time, and it sank the markets pretty bad. Well, yeah, well, I totally agree with you, and I believe Huawei's 100% with that too. Time in the market for sure, better than timing the market. So the next question, Pradeep. So what are these options? What are options? Can you explain to like a beginner like us, me? I have some idea with options, but I really didn't dwell on it. Huawei may have encountered it as well.
I have no idea about options, so this
No.
is my primer.
So
Okay.
options are like contracts. They are not exactly the stock itself. They are derivatives, like futures and options. These are derivatives of a stock.
Mhm.
So these are contracts actually, and you are going into the contract saying that, depending on your speculation, how the market would move, you will actually, buy a call or a put. These are divided into calls and puts.
Calls and puts. Uh-huh.
Calls and puts. So depending on what you think and what you believe the market will move towards, you can either buy them or a combination of them. So these are contracts, like I said, and calls are like, I'm going to buy a stock for a particular price, and that's called strike price. Strike
Mhm.
price, options will have different strike prices, and
Uh-huh.
easy for easy understanding. If we take Apple and
Okay.
Apple stock, and it is around like 140 some dollars today, and if
Mhm.
I'm thinking it would be $160 after 2 months. So
Okay.
what I do
So
is
higher. Mhm.
I buy a call, and call is like, you are actually thinking, believing that the Apple actually will go up to
Yes.
certain level of time. I mean, certain level of dollar amount.
So you're like being bullish on the
Yeah,
stock. You're
right.
thinking it'll go up. Mhm.
Yeah. So if you are bullish, you can buy calls, and
Okay.
calls are like, you have the right to buy that particular stock for that particular amount of money,
Okay.
that strike price.
Mhm.
And one option, this is very important, one
Mm.
option is equal to 100 stocks. One option contract is equal to 100 stocks.
Like 100
So
shares?
100 shares, yeah,
Oh
100
wow.
shares of that particular stock.
Okay.
So like I was giving the example of Apple, like, if I'm thinking it would be 160.
Okay.
So if I'm going into the contract, buying a call. So the calls will be like there will be a preset amount for each call in there.
Mhm.
And when I'm buying a call, I would be paying that money to get into the contract.
Okay.
And if I'm proved to be right, if the Apple actually reaches 160, then I get to buy the Apple. I mean, if it reaches beyond 160, I'll still pay 160 for those contracts.
Oh, okay.
So whatever the excess you have, that's your gain.
Okay. So if the price goes higher than the strike price, then you're in the money.
Yeah,
Like, you
that's
gain some
so.
money.
So the beauty of the options is actually you can be bullish, you can be bearish, and you can be flat as well.
Oh,
If
okay.
you think, yeah, you can make money in any kind of market with the options. However, options are very risky. This is a disclaimer. Options are very risky.
Mhm.
You have to be really careful and not blow your account away,
Mhm.
because it's very easy to lose money in options as well. So it's very high risk, risk versus reward. So if you think that market was going to bullish, or if a stock is being bullish, then you
Mhm.
buy a call.
Okay.
If you believe that the stock or market is actually bearish, you buy a put.
Mhm.
So this is the simplest form. Again, you can sell a call, you can sell a put, and
Mhm.
that actually is a different story for the beginners. But to begin with,
Right.
this is the basic. If you're buying a call, you're in bullish mode. If you're
Mhm.
buying a put, you are in bearish mode.
So,
So,
Pradeep,
go ahead, Wawi.
what determines the price of the call or put?
The market makers. The market makers
Okay.
actually determines them. There is a value actually. It's called intrinsic value as well as time value in the option.
Mm-hmm.
Intrinsic value means, for example, again taking the example of Apple stock, it's 146. If I am buying an option, a call option for after a month, I mean for probably October, and I have to, I have to buy, I have to buy and I have to pay something for that. So that amount will have both time value as well as the intrinsic value of the option.
Okay.
Mhm.
And the time value decreases every day. And that actually, going into the details, those are called
Mhm.
option Greeks. That's called alpha, beta, delta
Oh,
actually.
yeah. Oh, yeah.
Option Greeks.
So option Greeks, I mean, if you get into more details, that's why I was saying, it's a little bit of, we have to dig deeper into that.
More
But
jargons.
these are basic things. You
Right.
have to know what the delta of an option is,
Uh-huh.
and you have to know what the theta of the option
So,
is, at least if you are a beginner.
so without getting too much deep on options trading,
Right.
Pradeep, what do you think about the strike price? So, for example, let's just say, going back to your example, Apple today is at 146 as it shows here. You're buying a call with a strike price of 160. What happens if Apple, instead of reaching 160, it just reached 150? Will I lose a lot of money?
Yes, and whatever the money you pay, actually, if I am buying way out of money, that is called way out of money option,
Uh-huh. Uh-huh.
or out of money strike price.
Okay.
Or if I am buying 130 strike price, it is called in the money. Okay, so it
Okay.
is out of money if it is 160. So the value of the stock option is completely the time value. It doesn't have any intrinsic value, to
Mm.
be in the layman's language. So as the days goes, your option contract will keep losing the money.
Okay.
And by the time, if it doesn't reach 160, then
Mhm.
you're going to lose all the money what you have spent. But your loss will be limited to what you have spent for that contract. You don't have to buy the whole stock.
Mhm. So you're like paying per day? Is that appropriate, or you just pay one time for the contract?
Just one time, and it actually decays. Just like half life of things, it decays. That's what we call in the option language, the
Mhm.
decay of the option, and that's called theta. Not getting into details, but
Mhm.
so
So
there is a decay every day.
gotcha. So by the time that the date is set, let's say you want to exercise your option to buy the stock, can you, since you said one contract is 100 shares,
Right.
so can you exercise like just buy a couple instead of 100?
It has to be 100, and you have the right
Oh,
to
okay.
exercise it anytime.
Uh-huh.
It's not like, European options and US options are a little different.
Mm.
So we are not getting into much details, but American options, we can exercise the option anytime. For example, again, quickly,
Mm.
if I am buying something very much in the money, like 130 for Apple right
Okay.
now today, I can exercise it immediately tomorrow. But the premium I pay would
Mhm.
be really higher because it's in the money.
Oh,
So
because it's like almost certain 100% guarantee that you're gonna make. Because right
yeah,
now it's 146. Yeah.
right. But the premium you're going to pay is still like, you're paying for the time value as well. So that you might lose.
Mm.
Oh, okay.
So that's really important to know the delta and theta of the options. Like delta is the money you make whenever $1 of gain in the stock price occurs. That many dollars, the amount of dollars you get is the delta, and
Right.
theta is the amount of dollar decays per day.
Mm.
So, Pradeep, when you're setting up your options, do you have to call a broker, or it's just in the application that you're using?
It's just in the application. Almost every broker actually has the option trading convenience. Uh, so you don't really have to call a broker to execute whatever you need. You just have to, whenever the stock actually shows, in the brokerage account,
Hmm.
there is a small tab for the options. You click that, and the
Yes.
full list of the options actually shows up. Then you can buy right from there.
Do you have to have the actual shares of the stock to deal with options?
No, like no. In the beginning, I was saying these are only the contracts. This is not the real stock. It is a derivative market.
I see.
So, any Pradeep, heading on to our next question. Any or most memorable experience trading options?
I have to say, I mean, I have plenty. Some really positive and some really negative as well. Like I said, options are risky.
Mhm.
There have been days when I lost a lot. There have been days I actually gained a lot. One time, most memorable was I was doing Amazon. I bought Amazon for the earnings, and actually it blasted out the earnings, and the gain was really huge.
Oh, wow.
Yeah,
Yeah, Amazon, like even like trading at stock alone, it was hovering somewhere in the 900s, like even below 1000 back then, right? When I
right,
was first looking at it.
right.
Now it's like how much? Do you have it, Huawei, right?
Yeah, I
Amazon
do
share.
have Amazon.
It's
Yeah,
3,400 something.
I don't know how much it is now, but it's just there. I'm leaving it there. Um, so, um, how do you know? How do you know the trajectory? How do you predict that it's gonna go up, it's gonna go down? We tend to, like, I aggregate news. I listen to news. Um, what factors do you use to predict the trajectory?
That's a really good question. Actually, a lot of them, a lot of factors actually come into play.
Hmm.
First of all, the stocks I pick to do the options are mostly like, good companies.
Mhm.
Okay.
So first of all, that one, I mean, with strong fundamentals, and a lot of times, actually, I rely on the technical analysis. I have to be honest with you, with the candlestick patterns and the technical analysis, like how the behavior of the people who are actually buying and selling the stock is going on. So I go with a lot of candlestick patterns. I go with technical analysis, and of course,
Oh.
with the news as well, like, what's going on right now, what's the jobs report, what our feds are going to say, those things also play a major role. So it's a cumulative. It's not just one factor. It's a cumulative thing.
So,
Oh, so
Mhm.
you
Oh, go
use
ahead.
charts. You use charts
I do.
and aggregate news as well.
Right.
Okay.
So what can you say about those people in Reddit? Wowie, Pradeep, like those people were like suddenly just getting rich, like one spike, and they're like over $100,000 richer in like a split second, and otherwise some people also show their losses, like wide margin loss. So those are really possible. Can you like confirm that or?
To be honest with you, I don't have much knowledge to say or comment anything about that. I
Mhm.
stay away from those.
Right.
I'm too much honest with you, because it's a crowd mentality, and I don't have anything negative to say about people who actually get involved with that.
Mhm.
But it's very risky if it's shooting up that much. Like, this is what I believe. If it takes a little time for it to shoot up that high, then it will take a little time to go down as well.
Oh, okay. That's a good
But
point.
yeah.
That's a good point.
Mhm.
Well, there's another thing that I would see this on the Fidelity app, but it's now no longer there for some reason. It's called stock tweets. Do you have that? Do you ever use that? It's just like comments from traders.
I use that. Honestly, I used that for 1 year at least, around in 2018.
Mm-hmm.
Then I deleted the app. I mean, nothing
Mhm.
wrong with the app. Again, I don't
Oh.
have any personal issues with anything. But a lot of people actually, if you are actually bullish on a stock, irrespective of what's going on in the market, you start trolling some people who are bearish.
Mm-hmm.
Then I just didn't like that.
Mhm.
Okay.
Don't bring your personal things in there. But yeah, I used it. I used it for a year. Didn't Now it's deleted.
Okay. Yeah, I don't have that either showing up on my app anymore. So basically, patterns. You're looking at patterns and aggregating news,
Right.
and good companies. You're choosing good companies.
Good
So,
companies with good
mm,
fundamentals.
Give
so,
us an example of a good company that you would option trade on.
Like I said, Apple, Amazon, Google, these are for sure. And I like Nvidia as well.
Nvidia. I think
Nvidia as well.
yeah, a couple of episodes, like I think on our June episode, we also noticed like how big Nvidia is doing. Like now it's like one of the top 5 like biggest companies here in the US. Incredible. Like out of nowhere. I mean, I wouldn't say out of nowhere, but I don't think it was anywhere actually. Just a couple years ago. And then I think it started with a Bitcoin mania and people buying its gadgets to you know m-
Mine the
facilitate their
Bitcoin.
mind. Yeah, exactly. So, Pradeep, would you be open to sharing your worst loss experience in options, or let's go ahead to the next question?
Like I said, there are
Oh.
there are days when I actually lost like around 5 to 7,000 in a day, and there are days
Whoa.
when I gained 5 to 7,000 a day. So
So at least you kind of make time and make gains for it too, because
right,
you have to know what you're doing. Because options is not a crazy, like I mean not an easy thing to
not an easy.
discover, and it takes a little bit of time to understand. So yeah,
Well,
going.
to handle that much risk, Pradeep, how do you have that gut, to handle that risk? How do you like strengthen your conviction? What strengthens your conviction before you punch that button?
Okay, so basically, my conviction comes from my investing.
Mm,
So I have an account that is dedicated. Like I was saying, if you have a smaller account, um, try not to bet or try not to get into contracts with the options more than 10%. Always keep it less than 10% of your whole account.
mm-hmm,
And when you have the account set that this one is growing, but this is the money I'm willing to lose, no matter what, if I actually gain. So that's what I'm actually putting into the option account, option trading.
Gotcha. So at
So,
least not the whole, like not the entire portfolio is going into options.
right.
Mhm.
Keep it minimal. That's what I strongly say. Maybe 5% or less than 10% for sure.
So in addition to that, I know that's a great tip for the newbies. Any additional tips for newbies wanting to dive into options, Pradeep?
So if you are trying to get into the options,
Mm.
first thing is you can always, a lot of brokerages offer paper trading account. So get
Okay.
some experience. Get some
Mhm.
experience before you start losing money, before you just throw the money away in the market.
Right.
Get some experience, maybe paper trade. And the best way to start, if you're really doing the options, if you're trading the options, best way to start is with the covered call, because the losses are not as high as the other types of combinations. The covered call is like, you own the stock and you are actually buying an option contract on that particular stock,
Okay.
the 100 shares of that particular stock. So covered call is the best way to start, and it is suggested by a lot of people, and I do recommend that as well.
So it's like you already have the stock, so you're not really entitled to buy it upon contract expiration, or is that correct?
So covered call is actually you are getting into contract to sell the stock.
Oh, okay.
So what you're doing is that's opposite. Like
Mm.
you have a stock of,
Okay.
I wish actually I can show all the graphs, but it will be very detailed.
Right. Sure.
The thing. But covered call is like you are trying to say that I'm going to sell this stock for that particular amount of money,
Okay.
and you know you are buying. I'll tell you one thing. Let's put it this way: you
Mm.
are buying the stock at a discount. So if you're buying 100 shares of Apple for, say, Apple 146, so how much would be the 100 shares of that Apple? 14,600.
Right.
So if you are actually getting into the covered call, you will get paid instead of you paying it, because you are selling it now. You are not buying the contract, you are selling the contract now. So these are other ways. Like, so you are selling the
Oh,
contract, saying that, per se, I'm going to sell the Apple at 150.
Okay.
So if the Apple stays the same at 146,
Okay.
or if it goes up to 160, you make the same amount of money. Your income is limited, but you are actually getting the price
Mhm.
already. If you're getting into the contract, for example, if a contract is $1,000, that's already in your pocket. You get a discount on that 100 shares.
Because their initial starting point is at a discount already.
Yes.
Got it.
So that's what I would do. Do the covered calls,
Covered
or
calls.
or if you are still not wanting to purchase the whole 100 shares or 100 shares of a stock,
Yes.
then go with simple calls, simple
Mhm.
call. Buying the call, and and pick a stock which doesn't have a highest premium. This is really important, because if I am picking Amazon, the
Mm.
premiums will be like $2,000, $3,000. I mean, you don't
Oh
want to
wow.
lose.
Jeez.
wow.
That's a
So
lot.
yeah, so pick a stock which has lowest premiums. Um, at least, like, stock value of $50 will have a premium of like 100 to 200 probably.
Mhm.
So then that's a good point to start, because it's 100 or 200 you are going to lose, not much, but you will, if actually the stock goes up, you're
Mhm.
getting the money, you're gaining it.
It's like little downside to none if
Pardon
if you try to at least follow that kind of like approach.
me? Right.
Mhm. All right. Well, our next segment, Pradeep, what is your favorite book?
There are a lot of favorite books I have, but
Mhm.
if I have to pick one for the general life experiences, I
Sure.
have to
Yes.
say
Yeah.
there
It
is
could.
a
Yeah,
book by
it could be.
Chanakya.
Mhm. Oh, sorry. It could be either financial related or life experience related. So
life related. It's a book actually by Chanakya, one of the Indian authors, like ancient books. And for the stock, I have to say The Intelligent Investor. It's a really good book.
oh, classic Benjamin Graham.
Right.
Nowadays, I don't think the readers would be able to. I even back then when I started reading it back in 2011, I think I kept like using my Weber's dictionary because it used old English for sure, like
Right.
traditional English. So it's kind of deep when you read that book. I have to reread it multiple times. Have you reread yours, Pradeep?
I read it like 1.5 times, I have to say.
There you go. Have you checked that book, Wowie? Intelligent Investor.
Now I will. I'll put it on my Audible.
Right.
Oh,
Yeah,
yeah.
that's what I did actually. I
Uh-huh.
have it on my Audible, so I listen it every now and then.
Right. Yeah, it helps you understand too, like just listening to a podcast. So next, Pradeep, what would you like to share to our listeners as your favorite quote?
Favorite what?
Quote.
Favorite quote. Coming back to the time. If you kill time now, time will kill you later. Start early.
Oh,
Whatever you're doing, anything, you don't have 100 years to do anything.
right.
Don't wait. If you are an investor, if you are an entrepreneur, it's okay to fail. It's
Hmm.
okay to fail, but if you don't try it, you failed already.
Right. That kind of reminds me of the question, simple question of what if, or just thinking about it when you're older and you think about what if I have done this, what if I've done that. It's kind of like blaming yourself, not like that, but just the what if part
Yeah, risk
lingering in your
taking is
mind.
not bad. You just have to be calculated risk.
Mhm.
But if you don't take it, then you will be like stuck with not doing anything.
Right.
Yeah. So just do it.
Just do it.
Mhm.
There you go.
Do it.
Do it and learn.
Do
There
it and
you
learn
go.
from it.
Yeah, that reminds me also of a quote by Dwayne Wade: "Fall 7 times, rise 8."
Mhm.
Right.
Well, Pradeep, thank you for joining us. I wish you would you like to stay with the rest of our segments? We have, some sort of like Wall Street update, just a couple of news slides and a video, and also a couple of trends in terms of sentiments of the overall market.
I'm good actually. Like I said, the internet is actually from this one. So
Oh, okay. All right. So yeah, we're gonna. So you're staying with us, Pradeep?
yeah, I can. It's not a problem.
All right. Okay, so a couple of news clips, Huawei, for the week. And Pradeep, this was just published this morning. Consumer sentiment. So U.S. consumer sentiment, which we have been observing for the past couple of weeks, have slowly declined. Not as much as the stock market. Stock market has continuously gone up, although it has some sort of like maintained a sideways movement recently. So as you can see in this article by MarketWatch, an analyst from chief economist Richard Curtin said that the steep August fall off in consumer sentiment ended in early September, but the small gain still meant that consumers expected the least favorable economic prospects in more than a decade. So this reminds me of what just happened last month. We turned negative in consumer sentiment. And to our listeners, U.S. economy is run by mostly consumers. 60 to 70% of the GDP, or the gross domestic product, which the U.S. economy runs on, relies on consumer spending. So it looks
Yes.
like this is a positive change, albeit a little bit still challenged, as according to this economist saying that the least favorable economic prospects still meant that the consumer still is a little bit wary. So this is a chart showing what just happened in the past couple months. It's a huge drop from July, 81% in terms of consumer sentiment. It dropped by more than 10 percentage points to 70. Now it bounced back up slowly to 71 as of last month.
Yeah, I
Um,
was just
mhm,
listening to Bloomberg a
uh-huh,
while ago, and I just heard that a lot of the consumers are not buying right now because they think the prices are too high,
right.
and Even the people that are lower in, well, even the middle income are already complaining of higher prices.
The inflation.
Yeah, and but on the other end, I was on like I saw an advertisement, and
Mm.
they were trying to entice people to start buying for Christmas
Oh yeah, Christmas is coming soon.
because they're saying that there won't be, the products won't last long,
Okay.
especially the PlayStations, the game boxes,
The modules, game
the
consoles.
modules.
Mhm.
That's anything with chips, they're saying may not be around for very long. So buy it now is what they're saying.
Buy in advance or something like that. Buy it now, pay later.
Oh yeah, that's something new too,
That's
right?
crazy. Yeah, yeah.
BNPL, BNPL.
BNPL, Affirm, and
Mhm.
what's the company that Square bought from Australia? That's crazy. Like they paid $28 billion
Afterpay.
Afterpay. Yeah, $28 billion transaction just over a month ago. That's a lot of money to spend on that type of business. But I guess it has a point, now that the inventory has gone down. But yeah, coming back to the consumer sentiment, definitely, Huawei, I agree with you. Car prices, even second hands, is still way up there. It's still because of the inflation and lots of money slushing around. People still have access to a huge amount of savings, cash pile, credit. The financial conditions is still pretty much easy at this point compared to being tightened because of the low interest rates. So on our next slide, it just shows the S&P 500 index, the Nasdaq. For the week, both indexes are down about 1%. But zooming out since the start of the year, it's still well over, almost 20% return. So for both indexes. So if you're in it for the long term, like Pradeep just said, you're still in the green. But if you're staying like you just invested this Monday and calling it quits this Friday, and you probably are taking a loss at this point in time. So this is an article from Seeking Alpha for our listeners. I'm going to read through the title and some brief mentions, some snippets in the article itself. The article is published just this morning. The title says, Money Market Funds Witness Their Largest Weekly Outflows of the Year. So for this year, the money market, or AKA, this is where investors put their money aside ready to use as a gunpowder or dry powder to buy stocks, witness a huge amount of cash outflow totaling $45 billion recently. So these investors are putting their money to work, more likely putting it in stocks and bonds. If you're gonna look deeper in the article, it said here S&P 500 and Invesco QQQ. For those listeners who are not aware, QQQ is also an index ETF for Nasdaq, which is like tech heavy. So these two indexes or equity ETFs took in a large amount of money inflow. 3 billion worth for S&P 500 ETF and 1.5 billion net inflow for QQQ or Invesco QQQ.
Yeah, speaking of Invesco, it looks like they're merging with State Street.
Oh, are they? Oh, okay.
Yeah.
I believe State Street is one of the like leading bankers there in Wall Street, like a titan, like number 3 or 4 in terms of retirement. I know it's BlackRock in the first and Vanguard or whichever they play. They interchange in between with $9 trillion in assets of under management. But I believe State Street comes close, and then Charles Schwab or Fidelity as well, for sure.
State Street has 4 trillion in assets, so this is going to
4 trillion,
yeah, make Invesco massive.
Definitely. And so, interestingly, as we have been discussing here, as inflation increased price results in increased prices, consumer sentiments lowering down. Interestingly, U.S. stocks or bank stocks in specifically have fallen in terms of like expecting that inflation is now starting to level off. I guess this is in connection with the Federal Reserve thinking that the inflation is like transitory, not being as permanent. On this article by Financial Times titled "Bonds Rally and Bank Stocks Fall on Signs U.S. Inflation is Leveling Off." So slight moderation in pace of price increases allays fears that Fed is heading for early rate rise. So take note, early rate rise. It all I feel like it all boils down whether the Fed is going to increase the rates soon enough or very soon or later, because the projection says that there might increase later on this year. Come to think of it, we're already in September. A couple of months later, it's already a new year. Like 3 months later, again, it's gonna
Mhm.
be a 2022. So it all boils down when the Fed will raise their rates. So if they raise their rates soon, we might experience a taper tantrum that we just discussed. Taper tantrum like similar to 2013 when stocks started to dropping because of the increase in rates.
Mhm.
Right. Most of the things are now actually dependent on what Feds actually. Everybody's watching Feds so closely and
Mhm.
making the decisions according to their moves.
Right.
That's what I believe.
Like I believe there are even memes now, right? Like where Federal James Jerome Powell is being like in a cartoon character, like carrying the stock market S&P 500 Dow Jones on his shoulder
Right.
because of the pressure of the federal rate hikes and all that. I mean,
Right.
now it's so transparent that we already know what's going on in the minds of the bank of banks, which is the Federal Reserve. So yeah, on this article, I just want to highlight this couple of paragraphs. Traders' long-term inflation expectations fell slightly after the release of the official figures, which showed consumer prices rose 0.3% in August from July. The 5-year break-even inflation rate, which measures expectations for inflation in 5 years, fell. So it actually fell from 2.57% yesterday to 2.52%, 0.05% difference this morning data. According to Zerid Osmani, manager of Martin Curry's Global Portfolio Trust, quote unquote, we are definitely seeing a trend of inflation becoming less severe. Inflationary pressures are going to die down from the back end of this year. An analyst in TD Securities added that the moderation in inflation creates less urgency for the Fed to tighten policy. So the less urgency will bring in more benefits to the stock market because it would entail less interest rate increase and more financial conditions, like better financial conditions for the overall public.
More
Uh,
liquid.
yes. So for this week, we usually look at the performance of different industries of the stock market. Interestingly, everybody else flunked the stock market except for energy. Energy or oil, primarily, is the only industry that rose this week, up about 2.4%. Otherwise, the rest of the industries from consumer cyclical, real estate, technology, worst performing is the utilities and basic materials. But overall, for the year, it's still communication service, which includes, the Netflix, yeah, and Google's, the big tech, energy, and financial, which are also known as opening or reopening place. As people go back to the streets, go back to work, they spend more money on oil, and therefore increases the demand on energy, more profits. Financials, higher interest rates supposedly, and more spending, more debt intake makes more profits to the banks. And overall, there doesn't seem like no industry has returned negative so far this year. So on to our next segment. This is the AAII, or American Association of Individual Investors sentiment. They do this once a week. This is a really nice survey of all the investment or investors out there, the DIY investors that are exposed to the market. So the question, what direction do members feel the stock market will be in the next 6 months? Believe it or not, it's a great drop. From September 8th, we were just hovering around 39%. Believe it or not, just a couple weeks ago, we just pierced through the 40% mark. for like since the start of the year. But as of a couple days ago, 9:15, when they took this survey, not much people are bullish, believe it or not. This is just, we're just hovering at 22%. I'm not sure what's going on with the investor sentiment. Are you guys feeling bullish? You yourself, Pradeep? Are you bullish or bearish? Oh, the audio. I think Pradeep is on mute at this point. Let me see.
Yeah.
Yeah,
Oh,
I
there
was
you go.
thinking actually, sorry for that. I
No,
was
no,
thinking
yeah,
actually the market will move sideways. I mean, this is just my, my
Sure.
impression of the market right now.
Yes.
Ups and downs, but whole thing will be like sideways.
At least
End of the
until
year,
the end of the year, right?
Yeah.
Because as I think, politics is, I don't know, they're trying to replace Jerome Powell early next year when the times, when it calls for, but we'll see. What do you think, Wabi, for the next 6 months? Are you bullish or bearish?
Well, I'm bullish on the fintechs. But I agree with Pradeep. It would be relatively flat for for the market, but you should expect a lot of restructuring.
Right.
We should see some companies having to restructure or merge with other companies.
More mergers at least.
Mhm.
Because yeah, this is quite a change. 22%. I believe this is not an error. This survey has been ongoing for decades. So 22%. We've never seen 22% or 20 percentages since we started the vlog, which is June. So but I believe, like, even I was monitoring it off record. It never went down as low as this. Many people are now being neutral, and more people are even getting more bearish. 39%, and almost pierced through 40% at this point in time. So sentiments are going wayside, too volatile. So I myself, I look at it as sideways as well. I agree with you guys. Sideways till Jay Powell announces something hopefully not crazy. So next sentiment, the cryptos. Huawei follows this closely. How about you, Pradeep? Are you into cryptos?
No, I'm not into cryptos.
No. So crypto sentiment from last week, it was at fear. All right, 46. Now it's at 48 points, 2 points. Now hovering at neutral. Anything up and coming or just happened over past couple of days, Swami?
Well, looks like the crypto market is reflecting the stock market as well. So it's been down slightly the past couple of days.
Right. But I believe it's more or less more volatile for crypto, I believe. Because
Absolutely.
yeah, money goes up and down there quick. So this is the fear and greed index. Well, it reflects what we had just saw in the AAII sentiment. People now are still, in the fear side of things. We are at 32. Previously, a week ago, we were at 34, hovering at fear. So people are kind of like getting into fear mode for some reason. At the graph, it shows fear, but if you look at this graph since a couple of years back, it looks like it's still within the same range. So nothing to jump or fear, actually. I'm going to pull up the volatility index at this point in time. Let's look at the volatility of the stock market itself, because I know it's been kind of going down sideways within the past couple of days. So for this week, this day alone, it rose 11%. That's quite a change. Okay, for the past 5 days since the start of the week, it's up almost 10%. Since the start of the year, see, it's still probably somewhere in the same kind of ballpark figure. I would be more worried if it starts hitting the 25. It means we're seeing some sort of gyrations happening. So
I'm sorry, actually, I have to interrupt here.
Sure.
For the coming back to the options, actually,
Uh-huh.
If you are selling the options instead of buying the contracts, volatility is your friend. The
Okay.
higher the volatility, the more money you make. That's why I was saying, like, you can make money either in the bullish market, in the bearish, or in the flat market.
Oh, because you can bet, you can invest on either side of the trade, right?
Right.
If you're thinking like what Pradeep has educated us on, If you're thinking that the stock price will go up in the near future on a certain date, you can buy call. If you think it's gonna go down, you can buy put. You can invest in put. So you get exposed both ways, not like buying a stock and holding it for a long period of time. There's no way to protect you from the downside, which also cuts both ways, I believe so. Because with more exposure to market movements or call or put, you can also get exposed to the further downside of things if it doesn't go your way.
Right.
Right. So this is a simple graph for our listeners. It's just entitled SPAC bust. So special entities, acquisition vehicles have lost their momentum definitely since February, where they were dealing a lot, where they were making a lot of deals. Since the start of the year, they were averaging around 26, 25 at peak. Well, at peak, they on mid-February, they were at 37 deals announced in 1 week. And now we're looking at a drop to 5 or 4, even a couple deal announcements of the SPAC. This is a chart from Goldman Sachs. All right, next slide. Monster, it says here, this is a Reuters business article entitled Monster Reallocations to Stocks as U.S. Tax Threat Recedes, according to Bank of America. So this is also fresh from the oven, published this morning. Investors stampeded into stocks and out of cash as global equity funds witness their biggest inflows since March 2021, while large cap US funds enjoyed a record haul. Huh. So this is coinciding with the article earlier we just read. So people are pulling out from money market funds. So this is quite interesting. This article just came up this morning. And we're looking at the sentiments side by side. It doesn't make sense. So the sentiments saying like people are getting bearish, investors are getting bearish. But now we're looking at the flows, which is more vital, I would say, because this provides the fundamentals. Where the money is actually going. So we're seeing more money is being put to the stock market, interestingly, according to this Bank of America Chief Investment Strategist survey. Michael Hartnett said, monster reallocation to cash to stocks as tax redistribution threat recedes and the Federal Reserve is expected to remain Wall Street friendly. I think that's the phrase right there that we all would like to see. What do you guys think?
I'd like to see that. Maybe we'll see it next week.
Right.
Yeah. Yeah, I guess they also highlighted the sentiment. Investment banks bull bear indicator held well below a February high as weaker economic data in China weighed on sentiment. So they're looking at the fundamentals, what's happening in China. Oh well, so these are very important things, easily to be taken granted for, but I think this provides a well-rounded like update in terms of what's happening in the stock market. So Pradeep, I'm glad that you're still with us because now we're gonna play a clip from Charles Schwab, Lisa Saunders. She's a really, really good analyst in Charles Schwab. She regularly gives her thoughts in Bloomberg, and this interview happened on September 13 with almost 5,000 views, entitled "Market Has Had a Rotational Correction," according to her. So let's just roll the clip.
It's a 5-day pullback. We're making jokes here about drawdown of 1.7%. Why will this market not go down? Why is the bid always there?
Depends on what you mean by the market. I think all you have to do is peel back the market onion a layer or two and see that we've had a rotational correction where segments of even the broad averages, the traditional averages, have had bigger pullbacks. You have a pretty decent percent of the S&P that at some point this year has had a more significant drawdown than a 10% correction territory. But look at where the speculative froth has been most significant. in some of those pockets outside the traditional averages, whether it's, SPACs or IPOs or the meme stocks or non-profitable tech or heavily shorted, the list goes on. And you've had drawdowns this year of, 30, 40, 50, even more, 70 or 80% in the case of some of the meme stocks. So we have seen significant weakness. It's just been masked by a benchmark index like the S&P continuing to do well because of the offsets of one area doing well when another area is kind of getting hammered.
So let's build on that if you can for us. What's Brett's telling you at the moment?
So we did end the streak with more than 75% of the S&P above a 200-day moving average. You have seen these sporadic rolling overs in terms of both the 50-day moving average, the 200-day moving average. And the last time that happened, we bottomed at a pretty weak level, but then rebounded again. So far, we haven't seen anything calamitous. I think what's key to look for is if sentiment stays frothy and you get a protracted deterioration in breadth. That's what happened in the 1999-2000 period. And with the benefit of hindsight, we know that that was a significant warning. But we've seen improvement at times, and we may be setting up a week like that too. So far, the breadth deterioration has been fairly short-lived in spurts, much in consistency with the rotational nature of the market in terms of leadership.
What do you guys think about Lisanne Saunders' commentary? Rotational correction.
Right. And I actually wanted to say that, the S&P 500, right? I mean, it did not, one of the brokers actually said it breached the 50-day moving average. So she's right at the point over there that, it might get some support to bounce back. It will be interesting next couple of weeks.
So the 50-day moving average for our listeners that don't or are not aware, this is the 50-day average of where the S&P 500 or whatever stock that is in the past 50 days. So overall, it kind of supports, acts as a line on average. If the market is going up, of course, the index is going up. The 50-day moving average is going up. But as Pradeep has also discussed, it doesn't just go up in a trend line, or else everybody's going to be a billionaire at this point. So it goes up and down, and now we're touching, the index is slowly touching that 50-day moving average, which is sort of critical, would you say, Pradeep? Or is 200-day more critical?
I would say 50-day is also equally critical. That's what, short term, 50 days short term, 200 days long term. So at least, we don't have a lot of time until the end of the year. So I would definitely go with the 50-day.
Right.
It actually shows how the market sentiment is turning around. 200 is the longer trend. 200-day moving average is a longer trend.
Right.
50 days, some knee-jerk reactions, like I was saying. So it's right at the 50-day. If it breaches it, if even 200-day is, gets breached, God forbid, then we can expect a recession or something like that.
Oh, I see. So it's like bearish sentiment all over again once we reach that point. Well, what do you think, Wawi?
I'm just assuming that a lot of investors are rebalancing their portfolio like I am, just hedging for, the easing, the quantitative easing.
Right. It's better to be open to any sudden changes in the market and always be ready. So, Wawi, do you have any quote for us? Quote for the week?
Not really. I really like Pradeep's quote of, do it and learn, and just don't waste your time, Well, like we say, right? Time is money.
That's true.
So,
all right.
And just, with our prior guest too, Pee-wee said, there's just that timeline, right? When you're born and then when you die, and what you do in between is what really matters.
Right. I think that's those
I kind of
words,
like that too.
Yeah, those words are simple, but I believe, it leaves a mark. Once you think about it thoroughly, if you have time for yourself, take a few minutes, think about it. Think about where you're at right now. See determine if you're doing something reasonable or rational, helpful to others as well. And
Yeah.
yeah. Mhm.
Well, that's being, ideal, but you do what your passion is, you do what you want to do, right?
Mm.
This is a free country.
Right.
So, express your freedom.
Right.
But don't harm anyone while you're doing it, right?
Yes, definitely. Well, Wawi and Pradeep, thank you so much for coming on this
Thank you,
evening.
Pradeep.
I know
It's a
everybody is
pleasure. It's a
busy,
pleasure.
especially.
Thank you for inviting me, and it's a pleasure being here.
I'm sure we're gonna hear more from you in our future episodes. Hopefully, Pradeep, if you let us invite you back in our episode. So, listeners, that does it for this week's episode. Send your questions if you have any, or if you just want to say hi, you can send them to my email, markuwawishow@gmail.com, or tweet me at marku_dpt. Remember, build that emergency savings and invest the rest for an abundant retirement. This is Mark Yu signing out. Bye, guys.